Hi, I'm John Stewart, Chief Investment Officer of Farmers Trust Company. This is the Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.
Hi, I'm John Stewart. Welcome to the Investor's Edge. First up, the week in review. Trump versus Powell. Well, markets have certainly calmed down a bit over the past couple of weeks as the Trump administration has made some concessions around its tariff plans, putting a pause on reciprocal tariffs and creating exemptions for certain products and industries. Now, Trump continues to play hardball with China, however, ratcheting up a tit-for-tat battle with the CCP that has current tariff rates on most Chinese imports at an eye-popping 145%. Now enter Fed Chair Jerome Powell. Just when markets were starting to find their footing after the early April swoon, Mr. Powell decided to throw cold water on the markets by trashing the administration's policies and indicating that investors shouldn't be holding their breath while waiting for Fed rate cuts. And that led to a decline of more than 2% in the S&P 500 index this past Wednesday. So the macro uncertainty remains, but two-way volatility is certainly preferable to a market in free fall. So stay tuned. For this week's featured insight, avoid looking back. Investors are prone to always look backward when making investment decisions. And this makes sense. They certainly don't have clarity on what the future holds, after all. But investors sometimes will try to make decisions based on whatever prevailing market trends were in place yesterday, or last month, or last year. And this can work as long as a certain trend is in place. But it's important to recognize when the game has changed and to look for clues as to what new emerging trends may be developing. For example, everyone is looking for opportunities to buy the mega cap growth stocks that have led the market during the past several years. But what if a new group of stocks will take the lead during the next market cycle? The largest stocks from 30 years ago may not be forgotten, but they didn't necessarily lead the market during the next cycle after the dot-com bubble burst in the year 2000. And at least a few of them ended up going bankrupt. Looking ahead, earnings season ramps up. Yes, it's time for another earnings season, and the early reporters, notably the large banks, have already begun releasing their results for the first quarter. The numbers are mostly good, and it's likely everything will look like it's on the up and up as companies continue to present their business results to Wall Street. More important, however, as always, will be the guidance, or in this case, the lack thereof, that companies provide regarding their expectations for the rest of the year. The macro picture has become quite cloudy. It's clear that the economy is at least slowing, but it'll be interesting to see what companies expect regarding the health of their business outlooks for the coming months. We'll just have to wait and see. Once again, I'm John Stewart. Thank you for watching The Investor's Edge.
The Investor's Edge, Market Insights with John Stewart, is brought to you by Farmers Trust Company.